first introduce myself. Some of you don't know who I am. I'm Steve Cole. I'm a CPA. I'm the finance chairman for my church, which means I get to advise Virginia here on all kinds of things, and then she ignores me. But I try not to let it bother me. We as a church have made most of the mistakes I'll be warning you against here. So we've kind of learned as we went along, and I'm sure you've learned some things you can share with us, and I'm hoping we can kind of share together. If you run into an interesting situation, I'd like to hear about it. Basically, I'm going to kind of warn you about some things you should be careful about, particularly in dealing with the IRS. They have, at least up to recently, they were really targeting churches and religious organizations. About a year ago, Congress finally kind of slapped the brakes on it and said, you know what, you need to have approval for church audits by someone in national authority, and they didn't really describe what that meant. So the IRS has kind of temporarily stopped all their church audits while they figure out just exactly what Congress did mean, but eventually they're going to get started again. And there's not a lot of full church audits. The IRS tends to focus on areas where they think this organization is really out of control. Kenneth Copeland Ministries comes to mind. They had a full church audit, and they really got their wrists slapped hard. A number of other large organizations did as well. Usually local churches are not doing anything quite so egregious as these big ministries are, but we can still get in trouble. And although church audits aren't that common, what is common is payroll tax problems. That's very common. I have not worked with a single church that didn't at some point have to deal with the IRS over payroll tax reporting or payroll tax paying, or some kind of issue with how you're filing W-2s and 1099s and paying your payroll taxes. So that is inevitably going to be a problem area. So we'll deal with that. We're also going to hit on a few other areas that the IRS doesn't really care about, but we as a church should care about. So I'm going to start off, and we're going to skip around the book a little bit. Let's turn to page 3, which is the 4th page in, because they didn't number the title page. Tax-exempt status. This is really important. You are a nonprofit organization, but you are not necessarily a tax-exempt organization. A church can be almost automatically a 501c3, and 501c3 is simply an IRS section, which means that if someone gives you money, it's a charitable contribution, and they can deduct it on their tax return. And this is usually a big deal for someone that wants to donate money for church. They usually like to know that they can write it off. And if they can't write it off, they are less likely to give to you. Shouldn't be that way, but it is. And so you always want to retain that 501c3 status. As a church, you don't have to file for it. You automatically qualify. Any other kind of nonprofit organization would have to file for it. It's a very lengthy and painful process. I've been through it. Trust me, it's nothing you would ever want to do. But as a church, you're automatically 501c3. And even if you weren't, the Eastern Regional Association, which you are part of, is also a 501c3 organization, so you kind of get coverage through them as well. So we're covered both ways. We just need to kind of avoid certain things that could take away your 501c3 status. And we're going to kind of get into that. Moving on to page 5. When we go through the things that you should not do, there are two words you need to be aware of. One is absolute and the other is substantial. If the IRS says there is an absolute prohibition on doing something, you cannot do any of it at all, even a little. Any is wrong. So if an absolute is something you really have to pay a lot of attention to, because if you do any of it, it endangers your 501c3 status. Substantial, on the other hand, means you have to be doing a lot of it before it becomes a problem. So if you're just doing a little of it, not a big deal. So as we go through here, we'll mention what is absolute, what is substantial, and usually the book will tell you this is absolute, this is substantial. Inurement to insiders. We're back with that. Basically, the prohibition against inurement is absolute. You cannot do it. And I'm not even sure what the word immurement means, because I had never heard about it before. But basically, it's a situation where insiders basically benefit from the operation of the church. They are getting a good deal, more than a good deal. It's like if you had a church property that you were selling and someone on the board said, I'd like to buy that from you at half what it's worth, and you sold it to him on that basis, that would be immurement to insiders. He's getting a special benefit. If you go to your pastor and say, you know, we're paying you a really good salary, but we love you so much that we're going to pay you a special dividend of 10% on any money we make, that is immurement to insiders. If you pay your pastor too much, and this is the problem with Kenneth Copeland Ministries and a lot of the other really big Christian ministries, what you get is a situation where the person in charge is treating the church as their personal piggy bank. That is immurement to insiders. If you start looking at it as your money and you're just going to dip into it whenever you need it, it's immurement to insiders. You're no longer running it like it was a Christian organization, you're running it like it was your personal business. And that's what the IRS is really uptight about. And so that's the one thing to avoid. Usually that's not a problem for us as churches, but it's something we have to be aware of. If you own property as a church, you need to be very careful that any kind of transactions that the church has with a board member or a large donor or the pastor are arm's length transactions. In other words, it's the same sort of deal you would make with a complete outsider that you didn't even know. If you're cutting them a sweetheart deal, you're running afoul of the immurement to insiders. That's all we're saying. You just need to be really careful about that. Across the page, there is private benefit. Now, this kind of sounds like the same thing, but it's not. We, as churches, will turn around and donate money to help people out. Sometimes this is people in the community. Oftentimes it's people in the church that need help, maybe have a deacon's fund, something like that. That's not private benefit. That's in accordance with what a church does. A church helps people who are in need. So you can help poor people in the community, have a soup kitchen, have a food pantry. That's all in accordance with what a church is supposed to do. It's not private benefit. Private benefit is someone who, I'll best explain this, someone that is not typically the recipient of largesse from a church. Suppose my daughter is going to go to a cheerleader academy and she has to gain funding to go there. She's got to raise $1,000. So she goes to my church and says, I want $100 so that I can go to this cheerleader academy. And because I'm chairman of the finance committee of the church, I said, well, why not? It's only $100. We'll give her $100. Well, that's not something a church would typically do. That's private benefit. Fortunately, it has to be substantial before it's a problem. So if you do private benefit now and again, as you will, I mean, it's kind of hard to avoid doing that sort of thing. We do at our church, we have a monthly church supper. And it's really for the community. It's a community supper. We invite everyone to come. There's no fee. We don't pass the hat. We don't ask for money. We just do it. And that's not private benefit, but people from our church also go. And so you could argue there's some private benefit there, but it's not substantial. It's very little. And as long as your church is just doing a little bit here and there, it's not a problem. But when you start doing stuff that's not charitable in nature, you're giving money to other people, you do have to kind of keep an eye on it. If it starts raising to the level where it is substantial, you may have a potential problem. Questions? Okay, feel free to just shoot your hand up if you do have a question. We're going to hop over to page 7.
We had one issue that came up where someone came to the board asking for sponsoring, say, a cancer fundraiser. So it wasn't religious in nature. And we actually turned them down because of setting a precedent.
Yeah, that's kind of in that gray area. Yeah, private benefits are kind of a hard thing to prove, but I mean, if this person's going for, if not something your church would typically support, and it's helping this individual. It's not actually helping because he's just funneling the money through to the nonprofit. So I think you could convincingly argue to the IRS that wasn't actually private benefit because there was no benefit to that individual. You know, if he was retaining some of the money, then bingo, private benefit, but usually not. Okay.
I agree with her. You don't want to set the precedent because every time I turn around, there's another walk for cancer, walk for Alzheimer's, walk for, you know, and so we have the same policy. You know, we don't, it has to be in line with church.
Correct. Yeah.
And private individuals can support it.
And
that's right.
And
that's fine. Private individuals, but not the church itself.
And that's one of the key things. You know, your church really should have policies on who we give to and who we support and what kind of charitable contributions we will accept. You won't necessarily accept every contribution someone wants to give. If someone wants to give you their prize collection full of Playboy magazines, chances are you want to say, no, thank you. And there's other reasons why you would not accept different types of gifts. But you do need to have policies because it helps. It gives you some structure. You can say, well, you know, our policy is, and there's no confusion. When new people come on board, they can read the policy and say, okay, this is what we do. And you can always update them from time to time as the situation changes. Okay, political campaign activity on page 7. This is one area where a lot of evangelical churches are fighting the IRS. There are certain things that you as a church are allowed to do under the law, and there are certain things you are not allowed to do. You can do some lobbying as long as it is not substantial. They kind of expect you to do a little bit of lobbying. Lobbying is the attempt to get certain legislation passed or to block it. For instance, in Maine, they've got something coming up on the ballot that's going to be for same-sex marriages, whether to allow it or not. A yes vote is for same-sex marriage, a no vote is against it. And so a lot of churches are lobbying against that. That's fine as long as it's not a substantial part of your activity. Here's what is absolutely not ever allowed, and it's over on page it is on page 7. The lobbying was back on page 6. Page 7, churches and religious organizations are absolutely prohibited from directly or indirectly participating in or intervening in any political campaign on behalf of or in opposition to any candidate for elected public office. And since this is absolutely going to be a problem, now some churches are going out and actually saying, you know, trying to defy the IRS, arguing that it's a matter of either, you know, a religious or freedom of religion or freedom of speech. I would caution you this on a couple of levels. Number one, eventually the IRS is going to get its act together and figure out which churches it's going to attack on which issues, and it's going to go after you on gangbusters. The IRS is one of the few government agencies I actually kind of respect because they do their job and they are very good at it. So I would caution you not to do something that is absolutely prohibited under the law. Secondly, whether or not you think you have freedom of speech or freedom of religion or whether this is an issue that you want to handle or not, there are ways of getting around it without violating the law, and I think we as Christians are called to at least respect the law and respect those authority over us. That's biblical. So we want to be careful. Now, if you can't intervene in a campaign, what can you do? You can do educational stuff. That is permitted. You can do, and I think it's further down here, you can invite candidates to speak. You have to be careful. It goes on here for pages, pages 10, 11, 12, on and on. There are a lot of things the church can do, and I encourage you to kind of get into the details of this. I'm not going to spend a lot of time on it because, quite frankly, I don't think it's a real key issue for churches that are trying to just, you know, preach the kingdom. I'm not really sure why you'd be involved in lobbying and political involvement, but if you are, you can do it legally by just reading the fine print and say, okay, here's something we can do, here's what we can't do. You're careful not to cross the boundaries. Now, I'm not going to deal any more with this particular area, but are there any questions on it before we move on? No? Excellent. Let's turn to page 16.
Which one?
16.
16, 1-6. Unrelated business income tax. This is something most churches never think about. We're charitable organizations, we're involved in charitable activities, and so what does tax have to do with us, the dreaded T word? If you have what the IRS calls unrelated business income in excess of $1,000, you now have to file a Form 990-T. Most nonprofit organizations have to file a Form 990 every year, unless they make less than $25,000 income a year, or if they're a church. Churches don't have to file 990. Hooray. And you should be happy about that, because the Form 990 with its attachments and schedules can wind out to about 20 pages. It's unbelievable. It's frightful. So you don't want to get involved with that. But the 990-T is required if you're unrelated business income. Now, here's where you have to be a little careful, because things can be a little strange. Advertising, gaming, sale of merchandise and publications, these are examples of stuff that really are not part of what you're doing as a church. They're just ways of raising money. Interestingly enough, guess what the one exception to gaming is?
Bingo!
Yes! Bingo! There is an exception for bingo. Big surprise. But if you're not doing bingo, if you're doing something else, then you have to watch out. That is unrelated business income. And again, if it's not substantial, that's fine. I mean, if your youth group goes out and does bottle drives, that's technically unrelated business income. But seriously, are they going to really go over $1,000 in bottles? That would be 20,000 bottles. Probably not. And here's the thing, they can say, well, we're doing this for the church. Yes, but it doesn't matter to the IRS. They don't care what you're using the funds for. It's still unrelated business income. That's what a bottle drive is. If you hold a raffle sale or a yard sale for your church, if it's over $1,000, you have unrelated business income.
Steve?
Yes?
If you're using that for a specific religious purpose, you still have to.
Correct. It doesn't matter what it's for. Yes?
What if substratum of your church did it? The youth group did it? Is it still part of the church?
The youth group is part of your church. If someone donates money to the church, it's because the youth group is kind of included underneath, you know, it's kind of covered by your church's 501c3 deduction, so people can donate money to it. We're starting to wander into a little bit of a gray area. I mean, the youth group is clearly part of your church. It's underneath it, because usually the pastor or someone on staff or a member of the church is in charge of it, and they have to report to the church every year. But suppose a member of the church, like myself, said, I'm going to go start a food pantry. And they just go charging off, and they start a food pantry, they don't report to you. Is it under the church or not? Probably not. If they're not reporting to you and they're doing it themselves and they're not raising money from you, that's a separate organization. But sometimes you get these little gray areas where someone says, I want to start a ministry, and they start reporting to the church. And the church never really said, go ahead and do it. It's just like, there it is. Is it or isn't it? So, you know, you get these strange little issues. But you do have to be aware of the fact that if you've got unrelated business income over here and over here, it's not going to take too long for it to go over $1,000. And so you do kind of need to keep track and be aware of stuff like that. They do have some interesting exceptions. Real estate. Here's a fun one. Let's suppose that you have 2 parsonages. I won't ask you why you have 2 parsonages, but let's just say you do. You've got 2 parsonages. One that you bought a long time ago, you paid off the mortgage, it's free and clear. You've got another mortgage, another parsonage that you do have a mortgage on. You just bought it recently to make your last pastor happy because he didn't like the first parsonage. So you kept the first parsonage, you got the second parsonage, you've got a mortgage on it. You get a new pastor, he doesn't like either one. He wants to have his own house. And so you agree to pay him a parsonage allowance. And to do that, you've got to turn around and rent out the 2 parsonages. Here's the thing. The one that has no mortgage on it is not unrelated business income because it falls under an exception. But the one with the mortgage on it is unrelated business income.
Wonderful.
Doesn't have to make a lot of sense. Here's the thing, with real estate, if you're renting out real estate, it automatically usually does not count as unrelated business income unless you borrowed money to buy that property. If you've got a mortgage on that property that you're renting out, it's now unrelated business income. Doesn't make any sense to me either, but there it is. So you need to be aware of that.
Now, I have a quick question. You talked about bottle drives. I can remember a couple of years ago, several years ago now, Vacation Bible School, we had the kids collect bottles and cans and we turned the money over as part of the mission collection from the Vacation Bible School. That would have been unrelated business expenses if it exceeded that $1,000. I don't know how much they collected. I don't remember at this time.
You could try and argue that it was actually an educational thing, and that's part of what a church does, is to teach people about being good stewards of God's world. And this is really part of teaching the children how to be good stewards of God's world, and therefore it was in keeping with your charitable purpose, and thus is not unrelated business income.
I'm
So
just
you
curious.
see how contorted this gets.
Yes.
It's kind of ridiculous, but my feeling is if you're significantly over the $1,000 limit, I would just file the 990T. Find someone that was willing to do it for you and file the darn thing. Chances are you're not going to have to pay much in the way of taxes. You're simply reporting to the IRS, here's what we got. I think there's an exemption that qualifies to a certain amount and it's not taxed. It's not a huge amount of tax, and it's best to just do it. It does talk about parking lots here as well. If the parking lot is being rented out and it's part of a church, you know, people park there on Sundays and then you rent it out during the week, it's probably not unrelated business income, but if it's a parking lot someplace else you don't use for church, suddenly it is unrelated business income. A lot of this doesn't make a lot of sense, but again, if you've got specific questions, feel free to email me. In fact, I'll give you my email address now. It's Steve, S-T-E-V-E, at consultyourcpa.com. CONSULTYOURCPA.com. So feel free at any point, if you've got questions later on, and chances are, I mean, if you're like me, you'll walk out of the meeting and go, oh, why didn't I ask him that? So you can email me and I'll be more than happy to respond. All right, let's turn to page 18. Now we're in the fun part, employee payroll taxes. This is where you will get into trouble with the IRS sooner or later because they're always watching this and it is kind of a big issue. Churches do have to pay Social Security and Medicare taxes for their employees unless it is an ordained pastor. And the reason for this is the pastor is kind of treated as both an employee and an independent contractor for employment tax purposes. It's kind of strange. You give him a W-2 and you show the total wages that he's earned, not the housing allowance, just the wages. And you don't show any federal withholding because typically you're not withholding federal taxes from him. You don't show Social Security wages because there aren't any. You don't show Medicare wages because there aren't any. He's going to pay that himself in his own tax return. It's just the way it's kind of developed over the years, and it's become this really strange little piece of tax law. The pastor will be paying Social Security tax not only on the wages, but also on his housing allowance, which is not taxable for income tax purposes. So, although you're not disclosing the housing allowance on the W-2, at some point you have to let the pastor know how much the housing allowance is that you're paying him. If you're just paying him a cash amount, then it's pretty obvious what it is. But if, like most churches, you supply a parsonage, then the housing allowance is the fair market value of that parsonage. So it doesn't matter how much you're paying for upkeep for it, or utilities, or taxes. What matters is, what could you rent it out for? That's the fair market value, and that is the housing allowance. Questions on that? Yes?
You can find out the fair market value by going online. There is a website that will give you fair market value that's acceptable to the IRS. When we bought our parsonage, that was the first question that came up. How do we determine the true fair market value? You know, and there is one that will show you exactly what the fair market.
What's that website?
I'd have to look it up again. But my husband hunted it up. He was very good about that. And you can just put in your zip code and it will show you the fair market value for all types of houses, for, you know, a small house, big house, apartment.
Yeah. You also need to consider your area. I assume it's also looking at the area as well.
It pays attention to the area, which was unique because our parsonage happens to be inland, even though it's right on the Linfield border.
Yeah.
If it had been across the border, it would have been a totally different value.
Yeah.
How about associate pastors, non-ordained?
If they're non-ordained, they're a regular employee, and that means you do take Social Security taxes out of their wages. They're not ordained. They have to be
Licensed or ordained?
yes, ordained, commissioned, or licensed. I'm not sure what commission means, but they have to be ordained or licensed, and there's a process for that in our denomination at least. They have to go through this ordination process, and they're licensed.
Yeah, our denomination has both license and ordination. So in our denomination, at least, you just have those two categories. Apparently, other denominations have also people who can be commissioned as ministers.
Yeah. Yes.
Is it true that an ordained minister has a certain amount of time to declare that he does not want to participate in the Social Security system?
Yes, and that has to be done fairly soon. You know, you can't go like 20 years into this ministry and, you know what, I've suddenly had a change of conscience. I just feel like Social Security is evil. He's going to do that right off the bat. There's specific rules about that.
Well, the who doesn't tell these new candidates that?
Yes, a new candidate could decide that when he's first starting out his ministry. Also, churches, yes.
I was going to say though, but the reason to opt out of Social Security is very specific. It's not, oh, I just don't want to do it. You have,
Yeah.
It has to be, you have to object in your conscience or something along those lines.
There are certain little hoops you have to jump through, so it's not something everyone's going to do. Also, technically, churches can do it as well, but they have to start right off when they first are created. So it would have to be a brand new church, and they have to jump through certain hoops as well. So if you're an existing church, then forget it. You're just going to have to pay the Social Security tax, or rather the pastoral. Churches or religious organizations are not liable for FUTA tax. That's federal unemployment. Most companies have to pay federal unemployment and state unemployment for their employees. For whatever reason, churches do not have to pay federal unemployment. That
You
is,
don't have to pay state unemployment in Massachusetts.
yeah, you have to look at your specific state. And I can't really address specific states. You have to check with your own state unemployment commission and find out what their rules are as far as whether churches pay state unemployment tax or not. Most states tend to follow the feds, but there are some states that just say, well, we're going to do it the opposite way. It's there. Now, moving over onto page 19, I did want to get into a discussion of your pastor's compensation package. From the church's standpoint, all the church really cares about, as far as keeping the pastor happy, is what is the total amount that we are going to pay our pastor. And let's say you said, okay, it's going to be $45,000 or whatever. So you've decided it's going to be $45,000. At that point, the finance committee, the official board, somebody needs to break that figure down, because there is really no reason why your pastor should have to pay more income taxes than he needs to. And there are certain components of his pay which are not taxable. If you reimburse him for his health insurance, not taxable. If you pay him a pension, not taxable. If you reimburse him for his mileage, not taxable. If you reimburse him for his education, his computers, his internet usage, his cell phone, we could go on and on and on, it's not taxable.
Cell phone, you got to be careful with.
Yes, you do. But if he's got a home phone as well, then I think we can pretty much get away with the cell phone being almost 100% business use. Or you could at least argue that whatever the personal use is de minimis, which means it's hardly noticeable. So, what is a good idea to kind of sit down with the pastor. Here's how we do it at our church, and you can adjust that as you want. Usually, as chairman of the finance committee, I sit down with Nick, as my pastor over there. Before we even submit the budget to the official board, we sit down and say, okay, how would we break out your compensation package? And we look at what he's going to have to pay for health insurance, we look at what he wants to have for a pension, we look at what he expects to have for educational expenses in the upcoming year, or whether he wants to go to a certain convention or so forth. And we kind of set those figures aside and say, okay, the rest is going to be salary. And we don't know what the salary figure is going to be yet because the board hasn't voted on it. Then the finance committee votes on the budget, they put together, we change it, submit it to the board votes on it, changes it however they want, they approve it, it goes to the church body, and then they finally accept the final budget, and that's what he's getting. But until then, we don't know for certain exactly what Nick's going to get, but we've got these components and we slap them around. And you might ask, does the church really need to know what all these little details are? Yes, they do. And the reason they need to do that is because the church and the official board have to approve them. And this is where you're going to get into a problem. If you're the church treasurer and you're trying to present this to the church is going to start arguing about how the thing's broken up and why so much money is going for this and why so much money is going for that. And you have to just kind of draw them back to the bottom line. We're paying them $45,000 a year, or whatever the figure is. That's what the church is voting on. They simply need to approve the breakdown. So if the IRS ever comes back to us and says, why did you break this down this way? You say, well, that's what the church approved. The church approved this, and you have to have that. Another important fact, and I believe it's on page 20. Accountable versus non-accountable plans. You're already beginning to regret coming to this class, aren't you?
No. Never have a non-accountable plan.
A non-accountable plan is simply this. Your employer says, you know what, you're driving the car a lot for business purposes. I'm going to give you $200 a month towards your car use. To kind of help you out with that, I'm going to give you $200 a month. Don't bother about reporting to me. I don't want to mess with that. I'm going to give you $200. It's your money. It's also now taxable income. It's going to show up on your W-2. On the other hand, if your employer instead had been slightly more intelligent and had said, you know what, I want to help you with a car. I will reimburse you for your mileage at the rate of 50 cents per mile up to $200 a month. Now it's an accountable plan. You have to submit a report each month saying, here's how many miles I drove. It's always going to come to more than $200. He pays you the $200, which is the limit he set, but it's now an accountable plan. You are accounting for it. And so, yes?
How about having so much in the market for gas for your car? Would having a receipt be accountable? Is that what it would be?
You could, yes. You could, it doesn't have to be mileage per se. You could just say, we will reimburse you for up to $200 per year. But as long as he's accounting for it in some way, he's giving you these gas receipts. Yep, it's more than $200. Here's your $200. Yeah, you can do that as well. I go with mileage myself because it's usually more beneficial. And the reason I say that is because the IRS right now is somewhere between 50 and 55 cents per mile. Most of us don't drive cars that expensive. Our actual cost is probably down around 30, 35 cents. And so it's just another way of paying your pastor in such a way that he doesn't have to pay more taxes than he really needs But yes, you can use it as gas, mileage, it doesn't matter. As long as it's accountable. He has to submit a report, and I've got one later on in the package that you'll see. I've got a sample expense report towards the end there. Any other questions on accountable versus non-accountable plans and why you would want to break up the pastor's salary into different pieces? No. Okay. Moving on to page 21. All tax-exempt organizations, including churches, are required to maintain books of accounting and other records necessary to justify their claim for exemption in the event of an audit. This means you need to keep good records. I'm going to strongly recommend, if you're not already doing so, you get a computer and buy either Quicken or QuickBooks and keep track of your church records in that. Yes?
Sorry, that's the specific reason I came here. Is there anything else besides QuickBooks?
Yes, I use a different type of software.
I've been running through treasurers because they don't want to handle QuickBooks.
They don't want to handle QuickBooks?
QuickBooks is annoying to use beyond belief.
Quicken is simpler.
I like it. We have an ancient money accounts.
There's a number of church management software out there that provides interface not only to collections and accounts payable and your general ledger. We use something from, it used to be called Green Tree, and I forget, they went and changed their name. You know how companies do that on you. But it's church management software. It's got a collections module where it keeps track of all our collections. It interfaces directly to the GL. So it brings all the collections right into the GL. It's got its account payable section. It's got a payroll module. It does all my calculations for any type of taxes and all my reporting. I can just push a button and it'll give me a 941 and it'll give me the state form that I have to file even though we don't have to pay state unemployment taxes. All of those things. It just does it real nicely. There is other chat software out there.
Nick, did you have a question?
I was going to say, it sounds nice, but it may be complicated. QuickBooks is complicated. You're looking for an easy application that an average or standard computer user.
The QuickBooks is not set up for churches.
No, QuickBooks is not set up for churches. This stuff is deliberately set up for churches.
But
It's
Quicken
this,
is much simpler. Quicken,
Okay.
Quicken, same company.
Yeah, Quicken is a fairly simple program, so I mean, if complexity is the problem, I'd go with Quicken. It's very straightforward. It's really designed for homes and very small businesses.
but see,
And
none of
most
those
churches.
things handle collections correctly. That's
Yeah,
where the
I'm
problem.
going to disagree with you, though. I do not recommend going with a church piece of church software. In my experience, I have never liked customized programs. They do one thing well, and everything else kind of goes by the doors. Here's the other problem. You are, over the course of your existence, going to have a number of different treasurers taking over the books, moving on, you'll get new treasurers. It really is going to serve you well to have a program that everyone understands. QuickBooks has a lock in the market. 85% of all users use QuickBooks. The chances that you, your accountant, your next treasurer knows QuickBooks is fairly high. If they have any financial background at all, chances are at some point they've been forced to work with QuickBooks. And while it does have a lot of bells and whistles that you do not need and will never use, you don't have to use all those bells and whistles. It would be useful if it broke things up between funds. It does not do that, but it does have classes, which serves essentially the same purpose. So I still recommend QuickBooks.
I'll show you my software sometime.
Okay. We'll agree to disagree on that. If you want something less complex, I'd go with Quicken. It's a fairly easy program. In fact, I think that's what we were using at our church right now. Okay. I just wanted to touch on that because it's important to have something, and really if you have a computerized system, anything that shows to the IRS that you're well organized is going to be helpful. If an IRS agent comes in, they're forming an opinion of your church right off the bat. They're asking you for things, they're asking for the bank statements, that's one of the first things they ask for. Let's see the bank statements. They want to see what the general ledger is. If you say it's all on the computer, you print stuff off, you've got all your bank statements in order, and everything is right there, it's meticulous, they're going to form a very good opinion of your church, and chances are the audit will go fairly smoothly. If it's a mess, so will the audit. Okay. On to page 24. Page 24 is charitable contributions, substantiation, and disclosure. And things changed a few years ago. It used to be, you know, if you were a charitable, if you were contributing to your church, you would just kind of keep track of it. And some people just estimate and say, well, I'm pretty sure I was throwing $20 a week into the offering plate, so there's, you know, and I'd have a figure. And so that was what I usually did when I sat down to do people's taxes, because I had my own accounting firm. And I can't do that anymore. Because now I have to say, well, do you have checks, copies of checks to support that? And the amount of charitable contributions people have been claiming has just plummeted. Suddenly, oh yeah, I was getting all the cash. Sure. So they have to have a copy, some kind of disclosure, something in writing that says, yes, I gave that amount of money. And if they get back a bank statement with the copies of the checks, that's sufficient. That works. You know, at first when the IRS came up with this new rule, we thought, oh, good Lord, you've got to be kidding us, because banks weren't sending back copies of the checks anymore. They're just sending a copy of the front page, but not the whole check. But that copy is sufficient. So as long as they've got that, or something, or a letter from the church, they're fine. Now, here's an exception. Down here in substantiation rules, a donor cannot claim a tax deduction for any single contribution of $250 or more unless the donor obtains a contemporaneous written acknowledgement of the contribution from the recipient church. Fortunately, contemporaneous is fairly loose. I was thinking at first, well, to me, contemporaneous means it's written at the same time. How are you going to do that? But no, it's before the due date of the tax return. So that means you really have until April 15th, and one reading of the rule would say you can even have until the extended filing date of October 15th. So that means at the end of the year, you can just do one letter to cover all of their $250 contributions and hopefully everything else. I am going to recommend that if you don't have one, switch over to an envelope system. This makes it envelope system. This makes things ever so much easier to keep track of what people are giving. You assign them a number, and they have an envelope. We hand out envelopes to people that want to be on the system. Right now, I think we've only got about 10, 12 people that are using the system. 15 is going on. 17. All right. We started out, we had like 3 or 4 people that were willing to be on the system, and now we're up to 17 in just a few years. So it does catch on. People realize, you know, I don't have to keep track of it anymore. All I have to do is put it in an envelope, and I can put cash in an envelope, because there it is. I'm going to get a contemporaneous written receipt from the church at the end of the year, and it will say, here's how much you gave. I can just hand that to my accountant who does the taxes, and I'm done. So it's a beautiful system. The IRS likes to see it because it's good control. People aren't just pulling a number out of thin air to say, I gave this to the church. The church is saying, here's what you gave, and they can back it up, because the collectors, and I'm sorry, this does more work onto the collectors, but the collectors are keeping track of this every week. And it goes onto their little spreadsheet, and then at the end of the year, they'll say, okay, number 40 gave this much, number 50 gave this much, number 63 gave this much, and the treasurer gets that information and then goes and prepares the letters. And I've got another sample letter at the end of this that you can use. There is some wording you have to have in there. You do have to say that
No goods or services.
yeah, nothing was the person giving the money did not receive anything other than services of intangible spiritual benefit, along those lines. In other words, they didn't get anything for their money, because if they did, that's got to be backed up. If you have some sort of a yard sale and someone gives money to the yard sale and they walk off with something worth $10, well, you've got to back $10 off what they gave, because that's going to be changed. And I'm not going to get into the rest of this, but it's just important to have a regular letter that goes out to the members of your church that gave $250 or more to clip. Or really, if you've got an envelope system, you can just keep track of all the money they've given. just so much easier. Your collectors can do it. In theory, QuickBooks or your church management software could do it as well, and then just print up a letter. So however you do it, though, you do need to kind of keep track of that. It's just a much better way of operating. Any questions on that?
I think if you send some money, say that's really very important, and you get a book in return, you'll get a letter from them, and they'll say they received a certain amount of money, and they show that you got a book.
Yeah, they back that
So you don't
value.
get credit for
Yes.
the difference.
Yeah, the same goes for Maine Public Broadcasting or one of those who send money during their fundraising drives, and they usually have a gift. You give $100, you get this. You get $200, you get this. And that, whatever the value is of that you're getting, gets backed off the amount of your gift. So you're just able to deduct it.
So don't send me a gift.
Yeah, well, you could obviously say that. Okay, so we took care of that. There is an article immediately after the IRS thing, so you're going to turn back, that says proper care of donor restricted gifts. This is
29. Keep turning.
This is really important. The IRS does not care
It
about
looks
it,
like this.
but we have to, because most state attorneys care about it. It is, in Maine, and I'm sure in most other states, against the law to use a donation for some purpose other than that for which it was donated. Now, the bulk of the money you receive over the course of the year is unrestricted. Someone just says, I like this church, here's some money, go crazy with it. And you do. So that's fine. But every once in a while, someone gives some money, and it is restricted for a specific purpose. They say, I want you to use this to buy new cushions for the pews because it hurts me when I sit down. And so you can only use it for that purpose. Okay? I did an audit years ago for a Red Cross chapter, and this was many, many years ago. That particular year, there had been enormous floods in Iowa. The Mississippi River had backed up, and there were just, people were donating money. At a certain point, though, the national chapter of the IRS, the Red Cross, said, okay, we're done. We've done all our work here. We've closed up. Our people have gone home. Stop sending money. Well, this particular local chapter had collected another $3,000 or so. It had not yet sent over, and the national chapter didn't want it. They have to hold that $3,000 until this floods in Iowa again. Not Wisconsin, not Illinois, not a fire. It's going to be floods in Iowa. The money can't be spent for anything else. Now, there is an exception. If the person who originally gave the money comes to the organization and says, I gave you $1,000 last year, and I want you to buy the really soft cushions, and you haven't done it, you can buy a really nice chair for the pastor instead. You go, hooray, we've always wanted to buy a pastor throne. So, he can do that. As long as the original donor says, I'm willing to change the restriction to something else, then you're golden. Now, what this should suggest to you is that when you receive money from someone and they're saying, this is a restricted gift, you do need to talk to them a little bit and say, do you really want to restrict this gift to that particular purpose? I mean, if that's what they really, really want, and if it's something the church is planning eventually to do anyway, great. We're both on the same page. But sometimes someone just says, well, I want it for this, and you say, well, what about all these other things we're trying to do? And I say, oh, yeah. They may not really care. If that's the case, you'd rather it was unrestricted, you could use it for whatever. There may be times when someone gives you a gift and you do not want it. I was talking about the Playboy magazine collection earlier, but there are other examples. Suppose someone had a house and they said, I want this house to go to be used for the youth fellowship. And you say, well, there's only 3 members of the youth fellowship. It's not, going to get much use. And you're thinking, wait, we'll have to pay for maintenance, taxes, utilities, insurance. Not much of a gift at that point. This is a gift you want to say no to. So you do need to have some kind of a policy at the church level that says, what kind of restricted gifts will we accept? I mean, most restricted gifts you'll say, fine, you know, we'll set it aside, use it for that purpose. Now, the other thing is, you do need to be careful about segregating it. And that usually means you should have a separate savings account where you take the money that was for the restricted gift, and you plug it in the savings account, and you track it. So you know how much is left over. Questions, comments? Yes?
We had a problem for a couple of years. We had what we call the new building fund.
Yep.
And people were donating to it. And then things changed, and the world changed, and we never did that. And that money sat there and sat there and sat there. And when we finally decided we weren't going to do a new building, it was 15 years down the road, no one had any record of who donated to what. Okay? We finally said, okay, and put out a broadcast message to everybody who'd ever donated to the church and said, would you object if we use this to our regular building fund?
Yeah.
Because we could not track who had donated to that fund. And some of them had come in cash before we had a good tracking system or anything like this. So that's what we did. Now, was there, I mean, the amount was only like $400 total. So nobody donated emergency money. Was there anything else we could have done or should have done?
Well, let's say you had received a total of $10,000, just to make it round. You had received 10,000 contributions, and you sent out this broad notice, and you got people responding back and said, yeah, we gave about $1,000 total, and you can use it for whatever you want. That means you can now take $1,000 out of that fund and use it for whatever you want. The other 9,000 sits there until you build a new building. It can't be used for anything else. It doesn't matter if the official board says we're going to change restriction, the board cannot. The church body can, it has to be the original donors. So you're violating the law if you use it for another purpose.
What if they're dead?
Pardon?
What if they die?
Then you can't change it. No one can change it. It sits there. You could just look at it as an endowment fund and say, okay, we'll just use the interest off it, which you can do. Just scrape the interest off it, you've got an endowment fund. That's really how you have to treat it. But that's an ongoing issue. You do, the donations have to be used in accordance with the donor's, intent. And when they tell you, I want it used for this specific purpose, and you accept the money, you're essentially saying, okay, that's how we'll spend it. And if you can't spend it that way, you've got to keep it pretty much indefinitely. Yes?
A church closes, you still have this money in the account.
Okay. When a nonprofit closes like a church, the money has to go to another 501c3 organization, which in our case would be the Eastern Region. That's what happens when churches close. Somebody goes to the Eastern Region, and it receives all that money. And if there were good records kept at the church which is closing, which is up for grabs, and if there's still money left, which is also a question, but if it gets the money and it was properly, segregated, and here's what it's supposed to be for, then the Eastern Region will also be bound by the same restrictions. But what I've seen happen in some churches when they start getting into financial difficulty is they start dipping into these restricted funds and borrowing, which is a no-no. So chances are there's nothing left. So if the Eastern Region gets what's left over, they say, I've got $100 here, but we've got $10,000 worth of restricted funds. Well, they've only got $100. They'll have to just let that sit in an endowment fund or something. Sorry about the sun. Any other questions on this? It's kind of a tricky little area. You just, need to try to do two things. Number one, talk to the people who are giving, say, are you really sure you want to give it for this specific purpose? If it's something the church is raising money for anyway, like a new building, then obviously that's a good thing. But if it's something the church wasn't even thinking about, like the soft little cushions, that's a good time to ask them, we're not really sure we're ever going to buy soft, comfortable cushions. Wouldn't you rather just give it to the general fund or give it to some other purpose that we actually are collecting money for? Because otherwise, you're accepting a gift that you can't do anything with. So I would raise that issue. And the second thing is you've really got to be really careful about segregating and carefully keeping track of these gifts so that you know whether you've spent the money or not. I went into one church a few years ago, and I looked at their fund balances, and a lot of them were negative, which shouldn't be possible. It meant they didn't have any money left over. They were actually in the negative. I said, well, what happened here? They said, well, we had to borrow that money. And it's like, it's restricted funds.
You gotta have that money.
Yeah, so that's why you keep it separate. Any other questions on that? Okay. A couple more pages. This is a sample letter that you can use. I just pulled it off the internet. I'm sure you can find one that's good or better. But just to give you an example of what you could use as a generic letter to send out at your end to the people who are on your envelope system or who gave more than $250 or whatever. One thing that occurs to me, what happens if someone gives stock to your church? This happens from time to time.
Yes, it is the most disastrous thing you ever want to deal with.
It is kind of a pain.
It took me 6 months to figure out how to accept that donation.
What happens is this person, they have to have a physical stock certificate, and sometimes they'll have the broker send it to you, other times they'll just sign it over to you on the back. The date that they give it to you is the date of the donation, and the amount of the donation is the fair market value of the stock on that day that they gave it to you. And sometimes it's easy to figure out if it's publicly traded stock, then hooray. If it's not publicly traded or it's very sparsely traded, wow, my sympathies are with you. But this happens. Some people will try to donate cars to you, and you're like, well, you know, it's a junker, why? Or real estate, and then you've got to value the real estate. I'll get to you in a second. If they give you something that really is substantially valuable, you may actually have to have it appraised, particularly with real estate. So you've got something, because they can't deduct it simply with your letter. If it gets to be over, I think it's $5,000, I'm a little hazy on that. There's a certain level, but it gets over that, I think it's $5,000. They have to have an appraisal letter before they can take the deduction from the tax return. So then you've got to have the thing appraised, and that's probably going to be your expense because they're giving it to you. So it gets a little complicated. But if you had a question.
I was going to make a statement about stock.
Yep.
What we finally did is we went to a certified financial planner, and he set up an account for us. And because we're a charitable organization, he doesn't charge us anything as long as we don't do any other services other than receive stock.
Right.
So now people, when they want to donate stock, we turn them over to them, they donate it to him, he puts it in our account, he documents the cost of the thing at the time it's received, and it saves headaches like you wouldn't believe.
Okay, that's an excellent idea.
It works.
Yeah. The other thing is, why would someone want to give stock? Because it's very advantageous to them. They're able to deduct the full fair value, even if they pay much less, and they don't have to recognize the capital gain on the difference. So they bought something for $1,000, it's grown to $2,000, they're now getting a deduction for $2,000, even though they originally paid $1,000. That's a powerful motivator to give. And something that we as churches should encourage. Even though it's a pain in the neck, it is still a donation, and it helps everybody. The next page is a mileage reimbursement report. This is really probably more complicated than you really need. Again, I pulled this off the internet. I want you to have an example. The point is that just your pastor just needs to account for his mileage or his gas usage or internet or whatever it is you're reimbursing him for. As long as he's accounting for it, it's an accountable plan. Shazam, you know, it's not income to him, and that's what we want. So, but this is an example of something you can use. And finally, I've given you something called an internal audit checklist guideline. This is just kind of something that you can look at. It's really not for doing an audit. I mean, every year, someone's got to audit the treasurer's report, and generally someone inspected that has no knowledge of finances and doesn't really know what they're doing. But that's all the fun of being a church. This really is just something to say, what kind of systems do we have in place? And I think this is something that your finance committee, if you have one, and you should, your finance committee could use this to kind of go through the church operation and say, are we doing this stuff? Do we have this documented? Are we operating with some strong internal controls? We just recently, was it 2 years ago, went through our financial procedures, and I think it was. I drew up a whole new set of financial procedures. I stole it from some other nonprofit organization. Always steal if it benefits you in a good way. But we put in all new internal controls and procedures, and we did something about the collector's business. You were mentioning earlier about the collector. We have one collector, and he's getting older, and one or two people were helping him from time to time, but it wasn't at all organized. And we kind of realized that is a huge problem area. It is, because the main thing in any church that's a danger of internal control is cash, because you get a lot of it. It all comes in on Sunday, it's got to make it to the bank, it's got to be counted, it's got to be tracked, it's got to be some accountability. So you should have people who are designated as collectors. They should know what their job is, and at some point, someone else, other than the collector or the treasurer, should be comparing the two reports to make sure they agree. And in our case, that's the finance committee. I do that. I collect the treasurer's report, I get the collector's report, and once a quarter I just make sure that they mesh. And usually they're off by some piddly little amount, $10 or something. And say, oh, we know what that is, because they track it by week, and it's very quick, easy to see where are we off. So it's an excellent internal control, and it's very easy to kind of make sure that's being done properly. That is pretty much all I have. Are there any questions or concerns you have? Some problem areas you've run into at your church? You're just wondering what the best way to handle is?
When we have special offering, people can dump it at. The counters do regular offering. They have Christmas in October, some other thing. Well, Penny Crusade, a lady takes that home. Some of them are just given to you, and nobody wants to do it. Is there a way to work on that? I mean, they're usually given after the service, after the counters have done their job and leaving.
Yeah. Ideally, this is
Never
something
take the money home.
Ideally, the collectors, there should be enough collectors so that someone can count it. You know, if you just got one collector and no one else is designated, that, you know, who knows? Our wake-up call was we realized that someone that wasn't even a member of the church was counting the offering Sunday morning. We're like, you know, you really need a group of people to say someone will count this, and it needs planning ahead, because we know when a special offering is coming up. If you've got a missionary that's coming to the church, chances are you're going to take a special offering. If there's a disaster in Haiti or someplace, well, chance special offering again. And you just need to plan ahead and say, okay, who's going to count the special offering? Which of the collectors that are designated to count are going to do the counting? So it does require a little bit of planning ahead, and sometimes you as the treasurer kind of have to take the lead and say, you know a special offering is coming up, who's counting it? And just to make sure that everyone's paying attention, because, you know.
I would like to say something about collections. In Massachusetts, at least, it is illegal for you to take that collection home. It needs to be counted that day, or placed in a safe, and counted the next day, and deposited. That is Massachusetts law.
And it's common sense as well.
And that's, like I said, when I first took over, our collector was taking it home, and then she went on vacation for 2.5 months to Ireland. And so all the collections that were done after the one she took home that she never deposited, plus all those for the next 2 months, had to be stored someplace. We didn't have a safe, we didn't have any place, and they weren't going in the bank because the collector wasn't there to count them. So we ended up changing our procedures. They get done right after church, there's Penny Crusade, we recruit another counter. One counter does Penny Crusade over here, another one does it over there, and the record's going on over here. We have contests where you have to keep track by person, you know, which half of the alphabet is getting which, so it's even more complicated for counting. But don't ever allow your people to take the money home. You're just putting yourself at terrible, terrible risk. Somebody's going to say, wait a minute, I know I donated $100, and you're only saying there was $50 in there, and then you got a problem. So don't ever allow people to take the money home.
A large part of that is simply protecting our collectors against unfair accusations. It's just not fair to them, and you just don't want to put us in a position where someone could make an unfair accusation. Any other questions? All right. Thank you very much for coming. It's been a lovely audience.
Thank you.